Good day, all. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Thursday, the 29th of August, 2019 at 2:50 p.m. Central Daylight Time. Now, keep in the back of your mind where we're at. We're right in front of the Labor Day holiday. People are leaving in droves from the exchanges. The volume of trade is lightened up, but we had a lot of short covering going on in grains over the past days, and we're getting a good rally in all the energies right now. And I mention energies because of ethanol and so on that you work with. But as we look at this, what is taking place? Well, in the energies, you know about Hurricane Dorian, and as that hurricane goes barreling possibly as a hurricane category 4 into Florida, possibly into the Gulf, you will shut down in the Gulf, if it looks like it's going to do that, probably all of the platforms that are in its way. That's quite a bit. So for a moment that changes the import-export, because I don't know where the storm's going. Nobody does. But the idea is it's going to hit Florida, and the idea, at least at this time, a Cat 4. As we look at the stock market, up because China reached out and said that they're going to meet with the U.S. In September. I think the market's overdoing that. Meeting is not changing the ways. China's not our enemy in trade. China's our trade partner that we have decided to stand up against for a number of trade practices and what they do. And unfortunately, in the ag sector, you took the hit. If you're a farmer, and for those trading it, you know what's been going on. So let's take a look at what's been going on. I need not tell you that we were up over $10 a year ago in April and June, and then the market collapsed to $7.97. We've bounced a little bit, but basically we're still under pressure, but not the kind of pressure that we were before. I don't know that you'll come into that pressure or not as we approach harvest eventually, but we're just getting into September, and that's still a little early. What I do know is something about chart patterns. And this is a downtrend line, and what we have here is a potential support line. So we've come in, we've challenged the support several times. We came up today and retested the resistance. If this market breaks out of this pattern, traders will say that it is broken out to the upside. If you got under, let's call it a close under 850, this pattern would be gone, and the traders might say that you're going back towards that $8 range. That's how I'm viewing what I see in the market. In the swing line pattern, which I created, I know what this did. This negated the downtrend. You're no longer in a downtrend. You're certainly not in an uptrend. What you did, if I take out today's action, you broke the pattern of lower highs, lower lows overall. And with the rally today, where are you? Well, when I look at the moving averages, you went right to the 18-day moving average at 872.25. I want to come back to this chart, if I could. You're right into the resistance of the downtrend lines. You got both things happening at the same time. Where was the support? Look at the lower Bollinger Bands, defined as that. This ends this phase of a bear trend, but it doesn't start a bull trend. You're still under the 18-day average of closes. Even if you were to close over it, I have a pattern of a lower low and a higher high. That's not an uptrend. Let's assume the market goes up, not down, get some piece of news. Resistance, rather formidable at 890, 891, and I think a lot of farmers will be happy to get up there. I'm not saying that will happen. I'm saying you went back to what I call this line in the sand, that 18-day average. From there, trends decide what they're going to set up as. When I look at momentum, we had been oversold. We're in the process of correcting that. These readings in the slow stochastic, I view readings that are under 30 but not going sideways under 20 as being oversold. So this fits right into that. Market comes back up. It's begun the process of getting out of an oversold territory, but it hasn't left it. In the meal market, you have a pattern where you got down to the lower Bollinger Band, as you can see. Challenged it again yesterday, went up to the 18-day average, and today moved through that, finishing at 298, back under it, and that's the resistance point. So again, that 18-day average, you've got to respect it. That's what I, number one, say. Number two, you're not trending. You have a lower low, higher high pattern in an oversold market that's been working to get over that, but it's not. Any reading under 30 is still oversold. When we come to the oil market, I want to go back to yesterday. One of the things I probably said, I don't remember every tape that I make here, is if it rallies, first resistance likely to be the 100-day average, then possibly the 18. But to get to the 18, you'd have to take out 28.98 and negate the downtrend. You're oversold. Today, you got to rally to the 100-day. I don't think the bears are stepping in. I think that's a natural resistance, but I'm nervous about selling, and I think a pro should be worried about selling in oversold conditions, and you're oversold. Trend down, oversold, first layer of resistance, second again, that 29.02, but if you hit that number, you break the downtrend. In the corn market, you have broken the downtrend, and I want to show you. You did that yesterday. You tried to follow through. Today, you didn't go anywhere. Why? Remember what we talk about, the slow stochastic reading. When you have an embedded reading, embedded means both numbers are under 20 going sideways. Until the red line crosses and closes, tongue-tied, crosses and closes over 20, that number stays in place, and it means that on rallies, I'm expecting to see the pros selling the market. They'll abandon the idea of the chart pattern. They'll play the momentum in favor of that, is what I've learned. Now, let's assume that you do lose the red line. You could rally to the 18-day average. Let's assume you stay embedded, just like this, both numbers don't close over 20, and you get to that 18-day average. That's when I expect the pros would be selling the market. The key is the slow stochastic, I think. In the wheat market, as you take a look, you're oversold. You have a market that's had what I call a contra-trend rally. And contra-trend because the bias is staying down. Prices are under the 18-day average. So even though the swing line has got the pattern of higher lows, higher highs, it's no more than a contra-trend rally into that line in the sand, that 18-day average, where I would think that the market has to make a decision what next. But as long as you stay oversold, I don't think it's going to get buying that's meaningful. In the sugar market, you went to the lower Bollinger Band. You started doing that on Tuesday. You challenged it again yesterday. All you're doing is bouncing away from it. Again, oversold, hit a profit objective. I wouldn't be surprised to see traders taking some money off the table. Again, today, three times in a row, hitting the lower Bollinger Band. In the coffee market, line in the sand. I want you to just look. From the 18-day average, this is where so much develops on a chart. You had a contra-trend rally up to that number, failed at it 3 days in a row, and today breaking back. You're not in a downtrend. You're in a market that has a lower low and a higher high, bias is down, momentum pointing down, and again, potential support 93.93, the lower Bollinger Band. In the coffee market, you see the battle that has ensued here. What is it, 6 days in a row now, if I'm correct, or 5? 1, 2, 3, 4, 5. Yeah, it's 5 days in a row, hitting the 18-day average, just working back and forth against it. The market has a higher high, a lower low pattern. Momentum had been pointing up, as you can see, drove with the market to that number. Never was trending. It just had the lower low, higher high, stalled out, and now it's pulling back. The strong dollar weighing on a lot of the soft commodities. In the cotton market, battleground, you know the number, the 18-day average. But here's something different. Do you see how narrow this band's getting? Something is brewing. So instead of this market being like the others, the chop where it rallied to it, whenever you narrow in these Bollinger Bands from there, it's almost like a spring in a pipe where you're winding it up and it's getting ready to do something. At this particular moment, there's no edge. You have the higher lows, you had the higher high, and all of a sudden you're starting to get the reversals in the market. I don't know which way it wants to try to tell us a story from. Cattle, my eye goes right here that you're oversold. So I have a market that's trying to work in what I call a contra trend because it's under the 18-day average of closes, which keeps the bias down. The two fight each other. But if you were to get back under 99.10, I believe that's yesterday's low, which is 99.10, you could start the pattern lower highs, lower lows. That could be a bear sign. However, being oversold could also be a false sign. I don't like oversold conditions. In the feeder cattle market, you rallied right up to that line in the sand, that 18-day average, and you stalled out there. The market did close higher. but you've still got lower highs. Now you got higher lows. Do you see that? I don't think you're trending. Last in the hog market, we talked about getting and fighting a battle at the 18-day average, probably yesterday. And that's what you're doing right now. You're just trying to figure out what the next move is. I understand this market getting a bid today. I think I got something in my eye there. And the reason I say that is when China's going to talk to the U.S., you would think, oh, maybe there's going to be some pork purchases. Why do I say that? Because the Chinese ministry today said they're releasing out of state reserves frozen pork and beef because they're in short supply. So that gives you an idea what's going on. This week we heard another case of African swine fever. So you've got problems in that. And this market's starting to do what? Instead of this type of trend coming down, it's starting to go more sideways than not. However, big however, every meeting we've had with the Chinese recently ends up with a lie on our part that, oh, it's constructive, it's not constructive, and nothing comes of them. I wouldn't expect anything different even at this one. I talk about that and a lot more in the morning. So try to imagine this. You wake up in the morning, gee, what do I want to do? Maybe you've got some questions, some trades you want pointed out, another person's point of view. Maybe you're a self-directed trader, you don't want to pay somebody for the brokerage, or maybe you're a broker-assisted person, and before you talk to your broker, maybe you want your own ideas to discuss with them. So what I do is I start you off each morning with my trade ideas, and I record at approximately 5:30 to 6 in the morning. I'm going to review 40 charts on futures, 5 ETFs, and no, you don't have to watch them all. There's going to be a slider right here. It's a video. You pull it, let's assume you want grains. It'll light up, it'll say grains. On the side here, it's also going to say for you what the different commodities are. Just click it and you listen to exactly what you want. You don't have to go through a 20-minute video, because I'm doing a lot of work every morning for you, and you don't have to listen to the things you don't want. You can just move around within it. I think that's, number one, helpful. Number two, that coffee's got to kick in at those hours, right? Believe me, I'm having a cup at that time. Here's the difference of those videos from what you're getting here. I have to talk general here. I can tell you what I think is going on, but I tell you what to do in these videos. Sometimes there's nothing to do, and I'll say, I don't think you should do anything. You may go a couple of days like that. You may have all of a sudden in that day 10 trades that I'm recommending. It can vary. It depends what the market's doing. But I'll give you a specific point of entry. I'm going to give you an exit point, both for a profit objective, a stop loss, moving stops. I'm going to cover you on it and tell you what I'm seeing going on in that particular trade. So the idea here is really simple. Maybe give you confidence, maybe give you ideas, maybe cover the areas you want. And I cover in this sequence all the time, the markets. So you can just pull between them and they're going to light up for you. And I'm covering the whole spectrum of futures. In fact, we had a long talk on it today because we're getting more demand for them. And how do we keep handling and going on to more places as these are going to be available. And they're all subscriptions. I want you to know that. They're all going to be, and they are at these prices. The first 30 days, $7.95, which is 26.5 cents a day. After that, you have two choices. You can quit. Actually, you have three. You can quit anytime. Number two, you can get a $30. That fee will revise to $15 on every 30 days, or $156 for a year. Your choice, which way you want to go. We have a whole section on our website about this, and all you have to do is go to it to read. Go to www.iraepstein.com, and when you get to the website, go to our education or research, Ira's Morning Subscriber video. You can do it there, and that's where you sign up as well. Not a free trial on this. So if you want that, fine. You can call my staff. They'll work with you, and you can click up here. It'll take you right to where you have to go. I'm Ira Epstein. Have a good day.